The Japanese yen strengthens after reaching its weakest against the US dollar. This marks its weakest level since April 1990 amid continued dollar strength and delayed Fed rate cut expectations. Despite this, S&P 500 futures rose as investors await major earnings reports and the upcoming Federal Reserve meeting. Now, earlier, the Japanese yen touched 160 against the dollar. However, it strengthened mid-morning, hovering around 156 or lower since the Bank of Japan's policy change. Continued dollar strength results from delayed Fed rate cut expectations. S&P 500 futures edge higher after their best week since November, with the Nasdaq also rallying to its best weekly performance in months. The Dow Jones sees a slight gain of 0.7%. Major earnings releases are expected from McDonald's, Apple, and Amazon, with focus also on the Federal Reserve's interest rate announcement and April's non-farm payrolls report. Now, let's discuss all of this with Mario Unali. He's the Senior Portfolio Manager at Kairos Partners and joins us from Milan in Italy. Mario, good to have you on the program. So, a really up and down morning for the Japanese yen. Why has it plunged, and how significant is the weakening of the currency, given it was at its lowest level since April 1990?
Yeah, I mean, it is very significant, especially given investor positioning getting into the various BOJ announcements. We got a positive surprise last month when the BOJ actually normalized interest rate policy, actually ending a negative rate policy after so many years. The market was actually expecting the bank to do more than they were announcing they were going to do. And then everyone was basically disappointed in the last few sessions. So that's why you're seeing broadly yen weakness. The other part of the trade is obviously, as you mentioned, the strength of the dollar that we are seeing across the board, not just against the yen. That's something that, in my opinion, it's here to stay, and we will have to face a whole new reality where the yen is probably going to be even weaker unless the bank decides that they're going to intervene. But keep in mind, this is always like a pretty expensive business to defend currencies against the dollar.
Yeah, we'll certainly be keeping a close eye on that. Now, Mario, what factors are contributing to the rise in S&P 500 futures, especially after its strong performance last week, and how might this trend impact investor sentiment?
Yeah, I mean, this is earnings weeks, so part of that is positive reporting from some of the large cap names in the S&P 500. The other component is obviously we got a degree of rebound after a few negative weeks. So potentially this was only like a shallow correction in the context of a wider bull market. I'm not convinced. I mean, we will have to wait and see if that is actually the case. And obviously the key would be more earnings coming up in the next few days, and that will actually dictate the rest of the the next market pricing action for the foreseeable future.
Yeah, you mentioned waiting for those earnings reports, and we're expecting them this week from McDonald's, Apple, and Amazon. What indicators should investors be watching for potential market shifts here?
I think in the near term, positioning is always key. So we saw quite a significant degree of bearishness developing in the market in the last few sessions, and in the last month, I would argue. The near term peak of the MSCI World and any Western main indexes was around the end of the month and the beginning of April. So the month is broadly negative. We will have to see if actually investors are done selling the market, and it could well be the case if earnings are supportive. But I think it's at this point in time when we got a little bit of clarity around interest rates. So basically nothing's going to come in the next few weeks. The market is very much like a micro bottom-up market. So it's a stock picker market, and earnings will dictate the indices direction in the next few sessions.
Mario Unali, really good to get your analysis. Thank you so much.
Thank you.